Hey everybody, what's going on? It's James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's a little before 2 a.m. my time on November the 5th. So the daily close was about 8 hours ago. And I was really happy to see the way this thing played out. I was starting to get a little bit nervous, full disclosure, starting to think, uh-oh, maybe this is not what I think it is. So I'll talk about that in today's video, along with what I expect next for Bitcoin. Before I jump into that content though, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. So first, let's talk about what happened yesterday. Yesterday was an exciting day. We had that pump up to 9,600 bucks, and hopefully you saw yesterday's video and it was able to give you a little bit of peace of mind about what was going on. Right around the 7-minute and 50-second mark of that video, I said that I still suspected a pump to 96 or 9,700 was in the cards. It got there. Unfortunately for me, I had been waiting for that pump for about 5 days, and I took a nap yesterday. I'm getting old, I guess. I took a nap yesterday afternoon. I laid down for about 2 hours, and it was during those 2 hours that my target got hit. But I don't set orders on the exchanges in advance if I'm not going to be at my desk to trade them. Price alone is not a reason for me to enter a trade. I've got to be at my desk to say, okay, is there a setup there? And at 9,600 there was, but again, I missed it. But when I woke up and I saw that it was down about 9,400 from there, I felt pretty confident, and I'll show you guys one of the charts that made me feel confident. I was looking at the Binance chart. Binance has some of the highest volume in the space, so even though I don't trade on Binance a whole lot, I always try to keep an eye on it a little bit to see what's going on. So if I turn off these EMAs, you can see this. Basically from the top over here at 95.13, it didn't get to 9,600, it got to 95.13. Once it came back down, it retraced up to the 61.8 fib, which again, if you watch this video, you know is the short golden entry zone. This is where I like to take shorts at. It's also where institutional money often likes to take shorts at, is the golden zone. So it barely tiptoed in it, and then it started to drop. So by the time I woke up, it was already starting to drop a little bit. It was just over 9,400, and I thought, okay, looks like it's gonna, head south. And of course, here it is. I actually went to bed a little after 8 p.m. last night. Woke up randomly about 12:30. Came in here and started looking at charts. So there you have it. Looks pretty good. Was pretty happy with that. Let's take a look at the, and by the way, I'm going to zoom into the small picture in just a minute, but I want to take a look at the big picture. Remember guys, we were watching this, or I was watching to see how this thing acted with these bear market RSI zones. And the reason I was starting to get a little nervous is this almost looked like it was going to come up above that line, which is not what I wanted to do. I wanted to stay in this box. Now back in February of 2018, it did pop above the line right here. You can see a little bit, but still I didn't want to see that. So that was good. It stayed underneath that line. Also on our 3-day chart, remember I was looking, yesterday's video I talked about it, I was looking for it to make an M, and that's the reason that I thought it might pump to 96 and 9,700, because it made M's both of these times back here. So if we zoom in, there's our M, right? And I can actually zoom in, up, down, and it looks a little wonky now. It doesn't look too much like an M, but you have to remember this is this based off of the close of a candle. So this actually was up here, real close to this red line before price dump. When it was at 9,600, this was actually up here right next to that line. It looks like a beautiful M. So that looks pretty good to me. And again, if we look at this 3-day chart, we just look at the last year, we can see here that we're up here, we're inside this little gap here. It looks like we're trying to fill in this gap. And this is a volume gap, by the way, not the same thing as like a gap on the CME. But we still have these large gaps down here and down here, all the way down to the $4,000 level. And by the way, guys, when you hear me talk about wanting to fill in this gap at 4,100, this is one of the reasons I think this may be the actual bottom if we do drop this low, and that we may not get down to that $1,600 or $2,000 level. That's a plausible possibility, because there's this huge amount of volume sitting here, and this should in theory act as really strong support if we are to ever get down to that level. It would be unlikely that we drop underneath it, but it is a possibility that this ends up being, like I talked about in other videos, something like that. I'm not really expecting that, okay? Even if we go way back and include data from 2018 and from 2017, right? If we go back to the beginning of 2017, you can see really strong level of support. But we also, if we go back that far, we can see there's a huge gap right here that never got filled. So that's a double-edged sword. On one hand, it's like, okay, it never got filled, so it's possible that we are going to go down and fill it. On the other hand, it also shows that gaps don't have to fill. This one never filled before it went all the way up to the top. So it's entirely possible that this one never fills either, okay? But I'm still bearish, which shouldn't be a surprise to anybody, because unless we put in bullish structure, I won't turn into a bull, and we haven't done that. So that's the 3-day chart. I'll get rid of some of these. CME, wow, this was interesting. CME filled its gap. It went all the way down to $8,358 while I was sleeping. However, I haven't seen any other exchanges that had a drop like this, so this looks very, very sketchy to me. This was a $1,000 5-minute candle, right? This 5-minute candle opened at 9,385 and had a low of 8,360. So literally over $1,000 in 5 minutes. That looks pretty suspicious to me, and it reminds me a whole lot of this gap fill back here, where this thing went all the way down to like 6,000, but it didn't go down there on other exchanges. This was especially painful for me because I was trying to play this gap, and I had orders sitting, long orders sitting at 65.85, which was right around here. And on Coinbase, where my orders were sitting at, because I was buying spot, I wasn't buying margin, I was buying spot Bitcoin at the time, and it got down to 6,600 on Coinbase and missed my fills by $15 freaking dollars before shooting back up. So that made me a little pissy back there. Cost me a lot of money. Well, it didn't cost me any money, but I missed out on a huge gain. All right, so this gap is now filled, so it's now null and void. We don't need to talk about it anymore. Unfortunately for a lot of people, it only filled on the CME, and the price didn't move down on the other exchanges. If we look at a daily chart, let's pull up the daily. I posted something about this on Twitter yesterday because people were getting bullish, and I said, look, we're still in the same range, right? Unless we break out of this range, it's really nothing to write home about. So here we are. This is our support down here around that $7,300 area. This red line is resistance. This was our old support. This was the support all through this distribution phase, right? Just kept bouncing off of it over and over and over again. And by Wyckoff logic, you're supposed to come back up and retest that support before moving lower. Well, we have now done that. We've come up and retested it. We closed underneath it, had a false break here. We've stayed underneath it. Yesterday's pump to 9,600, snuck above it, but if you look, it closed 94.12 underneath resistance. And now, of course, we're putting in this really nasty looking railroad track on the daily. Okay, and remember what I said in yesterday's video, if we break underneath this blue line, which is the 200 daily moving average, I expect things to get very nasty very quick. I expect that we're going to drop very, very quickly. Okay, so we'll see what happens there. We did not make it all the way up to test the yellow line. I thought that was one possibility. It didn't come true. So now we'll just have to see what's going on. Let's take a look at a 5-minute chart. We're getting alarms going off here. Okay, that almost looks good for a long entry on a scalp. I'm not going to mess with it. I don't want it to stay up. I want to go back to bed in a few minutes. Okay, so that's kind of what I'm seeing on the daily, the 3-day, and the weekly for Bitcoin. Litecoin had a hell of a day yesterday. Had people FOMOing in like crazy. Pumped all the way back up to about 63 bucks. Was a huge, huge gain. I didn't buy any Litecoin. It didn't make it. I had an alarm set at 64. You can see this. The reason I had that set at 64 was that was basically the level of resistance that if it broke through that, I thought it might take a, basically run off, run up to that, $80, $90 level I talked about in yesterday's video. But again, I didn't play the trade. I was watching it really more than anything. So nothing new on Litecoin for me. So I want to talk a little bit about Wyckoff logic today, because there's actually two ways to look at what's going on, guys. And I gotta be honest and be transparent, because I don't want anybody to be colored by my bearish bias, if you will, my bearish bias when I look at the charts, because there is a possibility that we are in accumulation. Okay, so let me see if I can pull up, try to get a semi-clean chart. Let's look at just have a bunch of stuff on it. Yeah, this won't work. We'll just take all the stuff off. Okay. So what I want to do is I want to take all these moving averages off, and I just want to look at the price action. Okay, that's green lines or trend lines, so it ain't hurt nothing. So all of this up here was distribution, right? I don't think anybody can argue with that. That's pretty much a fact, which is what I said all along. But this right here is where things get sketchy. If you take a look at Wyckoff, okay, I'll show you the accumulation stuff. Well, shoot. All right, let's talk about distribution real quick. Long story short, distribution, you are supposed to break down, and then you are supposed to come up and retest the ice. Okay, you're supposed to bounce up and retest support flipped resistance. So we did that, right? That's what we're doing right now. And then you see how that gets trapped inside those ranges, just like we are over here. We're trapped in the range. So that looks very, very textbook distribution to me. The problem is this giant green volume bar. When you retest your support flipped resistance, it's supposed to be, by textbook definition, it's supposed to be a low volume rally. So this was supposed to be a small volume rally. Instead, we had this massive rally with massive volume. I'm not reading too much into it because the reality is this market is so manipulated, and so sometimes you get false signals, right? And we all know it's manipulated. It's not up for debate. Everybody knows that. You just have to play along with it, and you have to be willing to accept that if you're going to trade this market. You can't use it as an excuse, right? Oh, I lost because of manipulation. Well, tough. You know there's manipulation. If you're going to trade it, deal with it. So to me, this looks like it's probably false. It's probably fake volume, and not fake volume in the sense that it didn't happen, but fake volume in the sense it's probably limited to a few whales who are pumping this up so that they could further dump more bags. Also, I think there's probably a lot of stop losses being triggered on short positions. And this is something that a lot of people don't really understand. But listen, this buying wasn't necessarily bullish buying, okay? What that means is it's not necessarily that people were going long through here. It could be that there was just a bunch of shorts getting stopped out. What happens when a short gets stopped out? It makes the person buy Bitcoin, right? Because essentially they've sold Bitcoin that they didn't own. Now they have to buy it back at a higher price. So if you have a cascading, wall of stop losses being triggered, boom, 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 it's artificially pushing the price up, and that's bearish buying, okay? Just keep pushing it up until all the stop losses are liquidated, until all the stop losses are hit, and then there's no more stop losses to keep pushing it up, so you get this huge wick where it falls back down, right? That's what that is. That's a stop loss cascade is probably what caused that. Just one set of stop losses after another, after another, after another. Okay? So, still, I want to show this to you. Okay? It is very possible that instead of being right here where we bounced up and we're in this part of distribution, which is what I still believe, 100% believe that, it is entirely possible that we're actually in accumulation. Okay, and that what we had at 7,300 was actually our spring, right, where we fell down out of the trading range and then bounced right back up into it. And if so, that means we're probably somewhere in this area here, and the next leg is obviously up, right? Again, one of the reasons I don't believe this is the case is because you're supposed to get, a normal, natural movement up, right? The spring is supposed to bring you back up into the trading range. Like if it fell down to 7,300 and then bounced back up to 8 grand, that would look like a spring. Falling to 7,300 and bouncing to 10 grand looks like manipulation. Okay, but I wanted to point this out because it is possible that this is happening. Also, I'm going to point one other thing out because there is one thing that this reminds me of that happened in 2017. So we're going to have to go back to, I believe it was July, if I remember right. No, it was September. This same type of deal happened in September with the 61.8 fib. Instead of coming down and putting in structure, which is what I like to see when I'm going long, all it does is come down and touch the 61.8 and then it just rocketed off of it. See this? So it came up, came down, barely touched the 61.8 right here on this tail. I actually watched this. I remember sitting at my desk watching this in real time. And because I was so new to the market, I was actually panicking. I was actually worried that my Bitcoin was going to zero. But it just barely touched the 61.8 fib and it bounced off of it. And I remember at the time being bearish because a lot of big gurus, if you will, were bearish. So I actually sold my Bitcoin when it bounced. I sold it at $4,200 and I thought it was going to come back down and retest this, and it never did. See, never came back down. So I ended up having to buy my Bitcoin back higher, which is one of the dangers of trying to trade. But see, I just barely touched it. This has kind of been in the back of my mind now for the last couple of days, the way that it acted. And if you look, That's exactly what we did this time. And I'm going to tell you the key difference in just a second so that you don't have to worry too much. See this? We came down. Here's the 61.8 fib right here on my dotted line. We didn't quite get there on the BLX chart, but over on Coinbase we actually did. We just barely nipped that line and then, of course, shot off of it. The difference is this, and this is why I'm not playing it as a bull. The difference is when we did that back in the September of 2017, it was during a correction. It happened real fast. The correction that lasted a couple of weeks, right? We're in a strong uptrend. You can see here the correction started on September 2nd, right? And this happened on September 15th. So 2 weeks, boom, correction. And corrections tend to be fast. Down, boom, right up, continuing the uptrend. Okay? Basically, you get the step effect, right? So that's the difference, because right now, this is not an uptrend. This is a downtrend. So this happened in a downtrend. So some people are arguing and say, no, it's an uptrend, see? And that's possible. It's actually not a completely idiotic thing to say. But, there's a huge difference in a 4-month downtrend and a 2-week correction. So that's the reason I'm not really too worried about that. We're still inside of our downward sloping channel, so still bearish on that as well, okay? So let's take a look at the smaller time frames and see if we can get some kind of handle about what to expect the next couple of days. So first things first, let's go to a 4-hour chart. I was reading on Twitter yesterday, sometimes you find some good information on there, that Monday is apparently the highest price of the week, about 26% of the time, which is a little bit more than other days of the week. It's still not a lot, right? 26%, it's 1 out of 4 basically. So that's interesting. I do think this is going to be the high for the week. I think 9,600 was it. I think if you didn't get in there on your short, it may not be the best time to rush into a short because, who knows? The risk-reward ratio is not going to be that great at this point. So I'll just be day trading. Okay, I'm not going to try to chase down another short, which is unfortunate because I really wanted to make up for the loss I took on the spike. But I'll just day trade. This could pump back up, but I don't expect it, guys. I think that was it. I think that was our, last stop hunt before we probably move back down. And I think we'll probably move back down to at least this $8,600 area, probably closer to 85. And that's not necessarily, bad news for the bulls. That would be a pretty standard retracement to this old level of support. And it's still possible that we move down there and then keep going up. And again, I've talked about this in a video last week. That would be bullish structure if we can do that. If we can come down and find support and start moving up, that would look bullish, okay? If that support level, if we do get there and it fails to hold, then I would expect us to fall all the way down to 7,500 to fill in this liquidity gap that was created on this crazy pump. And of course, if we fall back to 7,500, this will end up being a giant BART, right? And the momentum will shift back to the bears. The bulls had the momentum, but really at this point they've lost it and it's just moved sideways. But if this thing drops back down, the bears will take over again, and I think the next stop will be ultimately down around 6,400, and then we'll have to see how it acts at that level if it gets to that level. So a little dangerous to trade this on the bigger time frames right now, on the 4-hour swings and stuff. Not going to touch it. Let's take a look at our RSI here. And don't really see any clear trend line. We had one that was long running. That was really, really dependable. Right there. You can see it came down, found support, came down, found support, and bounced off of it. So that might be worth keeping an eye on. If it gets back down to the level, see how it acts. But I'm not really that worried about it. If we look at an hourly chart, we had this nice trend line as well. We broke above it. And when we broke above it is when we hit 9,600. Found a little bit of support, but now we're back underneath it. So again, it looks like bulls have lost their oomph. If we draw a smaller trend line, yeah, I'm not seeing any trend line that looks like support. It looks like we're underneath all of them now. So it looks pretty bearish, okay? But that being said, just like it, with the bulls, you got to wait for bullish structure. Same thing with bears. You got to wait for bearish structure. You don't want to just chase trades, right? And there is no bearish structure right now. Right now, we're still stuck in this range, okay? So entirely possible that we just bounce around here for a while, okay? No one's going to like that, but it's entirely possible. The key level that I would watch is going to be this 200-day moving average. right? As long as that acts as support, there's a good chance we're going to just keep going back up and retesting the top of the range. But if it falls through, then the next step down is probably going to be this 8,500. And 8,500, by the way, is the 50 fib, guys. That's what that is. If this is an uptrend, the reason I said that it would be bullish if it bounced off of that is because a lot of times you'll get a trend continuation at the 50 fib. It's right around 80. It's saying 8,900 on this. Okay, well, maybe 8,900 will be our continuation. I don't think so. 8,500 is the 61.8 fib. That's what it was. I hadn't looked at the fibs in a few days. So 8,500 is the 61.8 fib. That's the golden ratio. So it's possible, same thing, it's possible to pull back to that. If you get an ABC correction like ABC, you normally go back to the 61.8 fib. So again, if it finds support there, I think that's bullish. It happens to line up really nicely with this, it's not a perfect W, but it does line up pretty nicely with this neckline here, right here at the 61.8 fib. So I would be careful shorting that area, okay? All right, so that's it. I think I'm going to go back to bed, but I hope you guys enjoyed this video. Please remember that I'm literally some guy sitting in a spare bedroom. Nothing in this video is trade advice or financial advice. You should always do your own due diligence before making any type of investment. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. And if you haven't already, please make sure to check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. This is James with Crypto Common Sense. Trade safe.